hope you guys are practicing what I shared with you in the course of the week from Tuesday through to today, to yesterday. Actually, I hope you guys are practicing. I'm looking forward to continue practicing and perfecting your skills in such areas. You see, candlestick pattern is always very vital, and it is a key part of technical analysis that if you understand, you will always have a better winning rate, because it's one of those support tools that if you incorporate to, in addition to support and resistance, and then maybe indicators, the relevant indicators, it would really improve your skill. Okay. Yeah, so always let's try to always practice, and more so let's understand very well so that we are always not left behind. Okay. Yeah, we're always on point in whatever we're doing. I trust that you guys have been saying the direction we are leading the team. We want to reduce on signal provision possibly and make you own the business. Yeah, we want you to learn and be able to pick your trades by yourself. We're not ruling out the fact that, of course, signal will continuously be shared, but we just wanted you guys to make it a point that you should rely less on the signal, but rather rely more on learning. Equip yourself with the relevant skills and knowledge that would be able to help you traverse the crypto market. Now, I must tell you guys, for those who don't want to learn, the crypto bear market is coming pretty soon. Pretty soon. So if you don't put it upon yourself to how to take position at the moment, acquire as much skill and knowledge as possible to trade, I'm seeing a number of people leaving trading, or are most likely to leave trading. Okay. Why? Because it is always a different story when it comes to a bear season. Unlike the Bitcoin halving year, and then the pre-bull run year, and then the bull run year. In the bear season, the market is always crazy. It is always crazy. It dumps. If I can remember vividly, it was in the last bear season that most people had to quit trading because they found themselves into unimaginable floating losses. Not that because they want to be in floating losses, but because normally in the bear seasons, based on what happened in the pre-bull run season year or the bull run year, in which people would have taken position, they bought their positions earlier and looked at long term to sell or exit the market after the assets gaining significant value. That is through the pre-bull year, bull run year, and to the bull run year. So they believe by then the asset would have gotten significant value, maybe 10x, 5x, or even 100x, depending on the kind of coin category you might have, or they might have invested in earlier. So when the bull run normally ends, such groups of traders tend to begin exiting the market, and the continuous taking of profit is going to have significant effect on the price. The price is going to drop. The price is going to drop significantly. Some coins will actually have new lows, all-time lows. Some, a number of them may actually end up being delisted because of probably low transaction, or less volatility, So a lot is not going to happen. So if you don't position yourself very well and you acquire a skill, you make it a point to really understand the market. It's gonna be difficult for some of you, especially those who think that they want to depend on signals, or those who probably think of just wanting to buy without having a skill of selling. So you need to make it a point that when we emphasize some of the things, I trust for those who have been in the business for some time, I know you guys understand what I'm talking about. Okay. When some of the things happened, very many people foresaw that. And the reason as to why then the technical analysis class had to come in, we started this technical analysis class back after seeing a lot of people frustrated. A lot of people by then exited, left RoyalQ thinking RoyalQ was the one not making them make the money, forgetting that RoyalQ is just a bot, it's just a tool that is supposed to, simplify or make your trading easy. But the real trading is in your understanding of the market, trading arena, which you'll be in position to transfer onto setting the coins right, having good settings and deriving good trading strategy. So it's the skill. So it is the skill set you have that you transfer on the bot settings, that from which you derive a trading strategy to help you win. So very many people left. They left trading and in that period, because they thought that it was RoyalQ not helping them make the money, yet it is an AI automated tool to help people make money, forgetting that RoyalQ basically works on your instruction. It's a tool that is supposed to help you work based on how you're gonna instruct it. It will not work by itself until you instruct it. And for you to instruct it right, that means you need to be knowing what you're doing, right? You need to be knowing which commands you would want to give it to do what. That is where now how the aspect of the learning and the skills become key, because you will know how much how to set your parameters, right? And then you will know always how much to take advantage in case the market goes against you, and the kind of strategy you would want to use uh, in setting the boat. Because when you talk about trade settings and strategy, this quite seem different, but then they work together. The real trade strategy, to me, how I best understand it in regards to RoyalQ is how the kind of methodology you employ. To set the multiple buying ratio, to take advantage of that is where you derive that strategy. One way of deriving that strategy. And yeah, plays a key role in your trading and the kind of settings that people may give in regards to trading, because the market is good, because however much you trade, depending anyhow you set your strategy, you just win because the market is doing good. But that time is coming. The real time for a test is coming. So you fail to take position, you fail to learn. It is okay. We shall be here to remind you. I will be here to remind you that I once told you this, because we experienced it, we saw it happen, and it's gonna happen again. Now, that is where, especially now, those trying to join futures trading, that is where now you have to make it upon yourself to really learn. That is why the other time I was saying, if you find yourself being liquidated several times, okay, you pause. Don't die. Okay, don't die. Take it easy upon yourself. It's still a long way to go. It's a journey, right? This is a journey. Okay, it's not something ending tomorrow. Pause for a minute. Try to have a little bit of learning. Try to find out what you're actually not doing right. Eh? Huh? Huh? So it's very important that you take it upon yourself and take a moment off. Okay, take a moment off. Let me tell you, if need be, first put futures, first put it to rest a little bit, right? Until you know what to do right. Then you can go there, because it is really going to help you in the times I'm telling you, when the bear season comes, because that is when we shall be shorting and shorting the market. There'll be less of long positions, more of shorting, right? And when you short, you will win better. So you need to learn, prepare yourself and position yourself for that time. Why people so much ran out of RoyalQ then is because by then, when some of the things were happening, RoyalQ had not yet incorporated the futures trading aspect on the board, yeah? So it was all about spot. But now that the futures part is there, man, please, it's like begging, but please, I know what I'm saying, and a couple of people here who have been there know what I'm saying, because it's what's going to happen. So learn, put it upon yourself to learn. At the moment, the best you could do, if you can trade spots, okay? That is if you want peace of mind, right? For now, because you've been severally liquidated, you're taking trades and it's really not falling in your favor, and you're like, damn, what is it? Okay. And then maybe you are moved by the screenshots of others, what they share, you know, you're moved by the noise that people probably may make in the news, and you find yourself, you're not in that kind of position in all category. For you, yes, you win, but you end up losing almost what you've made, all, including your capital. Sometimes all you're left with is just the screenshot of the record of the profit you made, but the actual money is not there. It is not there because RoyalQ does not track that. You don't see it. It will only give you the reflection of the record of what you made as revenue. But it will not tell you that this is the net profit, this is the gross profit, or this is what is available. So you need to understand that. So don't be moved by pressure. Don't really be moved by pressure. Don't you take it upon yourself. Own this business, own the trading for yourself. It's your personal decision that is going to help you or save you. Okay. So when we call on people to come to learn, if you get a chance and you're learning, please, you learn. Make it a point to learn always. Always, please. Okay. Learn, 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 learn. Have some people to inspire you. Okay. And most of the inspiration comes in sessions like this. Okay. There are people you may be looking up to and you think may be inspiring you. Get those inspiration, get those guidance. It's really going to help, because at the end of the day, whether you come and attend these classes or not, once you have the skill, you have it. You will be unstoppable. You won't require any skill to trade. You won't need to depend on anybody to trade, because you know what it takes to trade. Okay. I talk so much, especially when it comes to the futures traders. There are some people here who went into futures thinking that this is not like sport. They went unprepared. Some of them just joined the business and boom, they were introduced into futures, not understanding the market psychology, not understanding what it takes to traverse the futures market. And all they have is liquidation. All they have, all they have befriended is liquidation, loss, 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 loss. That is very risky. That's bad. That's really very bad. And for those who are introducing people into RoyalQ, okay, this I must say in good faith. If you have new prospects, please, please, if you know what you're doing, first introduce them. Let them start from spots, okay? And slowly, when they're fine, when they're now okay, and they're ready to go into futures, then please gradually introduce them there with guidance. Let them not just go and howl, because they will regret meeting you. I'm telling you, they will regret meeting you. Okay. I'm saying it's a free advice. If we really want to keep this business going, if we really want to guard this business that we're doing and we're looking at it as a long-term cash cow, let's introduce people right. Okay. Let's build them right. Rather start from spots. Spots, even if you go to into a little bit of a floating loss, you know it's just a matter of a moment. The price will gain, it will come back, and you'll have your whatever you had gone into floating loss back. But futures, how? If it is gone, it is gone. You get that? And the more it is going, the more it frustrates. The more you get hungry, the more you regret. And that is where you see multitudes of people living the RoyalQ, thinking that RoyalQ is not helping them make the money. Yet it is the guidance that is wanting. Okay. So it's a simple thing. Whoever is doing the marketing, whoever is building a team, should make it upon themselves to do that. Okay. Introduce them in sports first. Okay. If you can guide them, if you can give them those sports signals, let them begin from that point. Let them first appreciate trading. Okay. Let them see the results. Let them see the possibility. Then slowly, gradually introduce them into features and tell them the do's. Sometimes they know that. Sometimes they understand that once they take a step of going there, hey, whatever comes out, whatever comes out, they are responsible for that. It will be their personal decision, not you introducing them. Okay? So I hope I've said something, and I've said the mind of quite a number of people. But that is the reality, and that's what it is. Nothing more and nothing less. Otherwise, people are suffering down there. People are suffering. Liquidation is killing people. Liquidation is killing people. And if you're not ready, please don't go for futures fast. Okay. For me, I always advise people that if you have some level of capital, for example, like 1K, maybe from 800 to get, I mean, there's no reason for going into futures in a hurry if you have not understood it fully. You rather have a fallback position of spots. There, you will gradually learn after understanding and learning what it takes. Then you can begin risking a little into the futures. And you don't go with the mindset of being greed, wanting to make a million in a day. Or if you go gradually, you keep on, depending on the situation, you assess and keep on, increasing the risk with the time. But maybe taking there $100, using a little bit of the $100 first, and seeing the results, how it turns out. Then slowly you keep on probably adding the capital. Maybe you go to 200, but not in a hurry. You get that? Beginning from small leverage possibly, and then graduating, or going for big leverage. But you see, for me, there's one thing that I hear most people say, which is also okay, because that is their approach and view of that market. But I see no problem with large leverages. Picking large leverage multiples, right? Provided you understand risk management. Okay, there is no problem. You get that. But for as long as you don't understand that aspect, you always go for smaller leverage multiple. It will be fair on your side. Yeah. Okay, so that side, I trust that has been. I trust that has been at least a good nugget for those who probably in the call or on this call, and let's go through, or let's go to what I prepared to share with you today, and we'll see how we proceed building up from what we shared yesterday. So are we ready? Are we ready? Are we good? Yeah. Yeah, it's let's see. And just a little. Maybe that. Huh? No longer. Don't never do it. Never do it. Is that feedback? A long way. That could be mom. So let me share my screen, and we looked at what I prepared for us today. Okay. So I trust my audio is clear. It's not breaking, because I also trust in my network today, unless otherwise. I hope it's good, not breaking. And Gini. Okay. So I think we stopped at the double candlestick pattern yesterday, and today I would want us to continue further with understanding these candlestick patterns that we commonly view or see on the chart. And, yeah, we'll try to build up from there. Stick pattern category, where we're having 3 candlesticks trying to, on regards to what the market sentiment seems to be like. And so when you talk about the triple candlestick patterns, we are basically meaning that 3 candlestick patterns that brings about a change in market sentiment, right? It can be a market sentiment that bring about a market sentiment change or shift from maybe bearish to bullish, or vice versa. So it's very important that we get to know them, because they are the things that often we are most likely going to see. So the first one on our line that we're going to look at is what we call the morning star. So the morning star is a 3 candlestick pattern that actually happens, or that appear in the course of a downtrend market structure. The morning star candlestick pattern consists of 3 candlesticks. Because it is formed in the course of a downtrend, and because we understand that what builds up to form a downtrend market structure is continuous bullish candlestick formations. Meaning, we're going to be having 3 candlesticks, beginning with a bearish candlestick. Then we follow the candlestick that follows next is either excuse me, is always an indecision candlestick, okay? And that indecision candlestick can either be a doji or a spinning top, okay? It can be a doji or a spinning top. You understand? So Then what follows that indecision candlestick would be a bullish behaviors or the intentions of the traders of wanting to stop the price from continuing to go down, but rather shift it to begin moving in the upward direction. All right, so it is very common, and we're going to cite a number of them on the chart. When they're really formed, it brings about a powerful movement. Now, when you cite at a morning star candlestick pattern, which you should put at the back of your mind that it will either appear like this or like this. So the indecision candles, that doesn't really matter. It can be a doji or it can be a spinning top. Remember, we talked about a spinning top yesterday, that it is a candlestick pattern that, it's a candlestick. It's a bullish candlestick that has a small body, but a very long wick on either sides. We talked about that yesterday. So here, it will appear either in this format or in this format. So irrespective of how it happens, that would be a morning star provided it happens in the course of a downtrend. So when you want to take entry, when you want to make entry based on the morning star candlestick pattern, after confirming the formation of a morning star candlestick pattern like we see here, like what I've tried to indicate in this picture, once it is formed, the best you can do is you're going to make entry on the next candlestick open. After the last bullish candle formed in the morning star pattern formation, you're going to make entry in the next candle open. All right. So when you make entry on the next candle open, always put at the back of your mind, you can set, now for those who love trading with stop losses, and those who love using margin call, like for us, we mostly use the margin call. Also, you're going to make entry at the candle open of the next candlestick, and then from point of entry, you're going to mark the low. Okay, sorry guys, some call interrupted my network. So, so what I was saying is when most of the times the best we would do is, because we're talking about a morning star pattern whose formation results into a long day of bullish movement, all right, or market price rise. Normally, to take advantage of any movement, of any drop in the market price, so that you can buy more positions and get ready for that massive move, is that you can always measure to half of that bullish. So you can always measure to half of the bullish candlestick, okay? Just measure to the half of that bullish candlestick from the open of the next candlestick, right? That you're going to make entry at. Just measure from that point to half of this bullish candlestick. Now, why would you measure that? Simply, you want to take advantage of this drop when the next candlestick opens and it tries to drop slightly in an attempt to pick momentum, and then you want the board to buy, okay, to acquire more positive, you want to acquire more coins or assets at that point, okay? So you want to buy more because it would have dropped a little bit lower, so the price is a little bit cheaper compared to when you bought at that candle open. So you want to buy here so that you have enough position to ride through that rise, okay? So you measure to half of that. So whatever percentage you get, after that measurement is what you're going to establish as your margin call drop for the first call. Then that remaining half to the low, that would have actually identified, which in this case is your support. That remaining percentage is what you would possibly set for your margin call drop for the second call, okay? But then if you're this person who loves trading with stop loss, you don't need this measurement to the half of the bullish candlestick. For you, you can set your stop loss slightly around here or below this zone, okay? Now, most of the times, the most important thing for those who love trading with stop losses, this you must know, that when you're setting a stop loss, the support is always not the point you should be eyeing at. The support should not be the point you're going to be eyeing at as your exit point. So it should always be somewhere below the support, right? Because remember, when the price is in the course of any movement, when it is coming back to retest a support level, you don't want to exit at that point. You don't want your position to close at that point, right? You want to remain in the trade sometime because the retest is inevitable. It happens. It is what is supposed to happen, right? So you want to be in the trade so that your stop loss can only be taken out in case the price moves below the support zone where you set your stop loss. So always set it at some percentage below a support level from your point of entry. So where we're identifying as a point of a buy opportunity with the boat, okay, where we're setting the margin call for you who trade with stop loss, that should not be a point you're looking at. For you, you should be looking at somewhere slightly below the point that we intend to make the robot execute a buy order at, because the price has gone against us. You understand? But if you also look at that and set that as a stop loss, you'll always be close. Your trades will always be closed in losses, and continuous losses always, once they add up, it is something big, right? Yeah, so that's how you go about that. So just do that. Okay, let it be manipulation that should take you out, or let it be a true breakout that should take you out. We shall be talking about scenarios of true breakouts and false breakouts shortly, because it is a key pattern that plays out in a price delivery algorithm basis. So with you understanding it, how you can easily be taken out is very key when you're trading, especially in the futures market. It's very important for you to know if you want to set your stop loss and you don't want to be taken out, because that is what the smart money know. They know that most traders who trade with stop losses will always set the stop loss somewhere slightly below a support or somewhere slightly above a resistance zone. And the percent you're going to set off that resistance and support zone becomes a key thing for you either being taken out or you surviving that, that takeout by the smart money, especially in the manipulative stage of price delivery algorithm. All right. So it is very important that you understand that. So having understood that, I hope it is clear. I hope it is clear with Morningstar candlestick pattern. I hope it is okay. Is that okay? Is it understood on how to take advantage of a Morningstar don't want to concentrate. It's just they don't know participate. They don't want to. Who are they? Just want to be there, spectator. Sometimes that is sometimes an act of kindness saying it really costs nothing for you to do that, unless otherwise. Some people were very rigid to do that. But it's always important. It's one way of getting feedback that we are either together or through that alone. Sometimes you may get a comment and probably you do one, or this part was not clear. You know, those reactions, those feedbacks helps when we're in a learning process like this. Okay, it's very important. Okay, it is very important. So for me, I love that those feedbacks be there. Okay, okay, yeah. So it is really important, at least. So that is really very important. So when I'm saying it is not clear. Okay. You will understand. Okay. So what is not clear? What is not clear? What is not clear here? What is not clear? Where is it? What is not clear? This John Suk. John Suk, what is not clear? So what is not clear? Hmm? What is not clear here? What is not clear? Somebody said it's not clear. This guy here. I'm looking for John Suk. Jan Suk. Mm. Yeah, we're gonna give that example. We're gonna give. Okay, let's go to the. Let's see if we can go to the chat and let's go to the chat. Okay, so let's look at example. Let's try to see if we can find a morning star candlestick pattern on any candlestick here. Let me see if I can use. So let's look at an example. Let's see if I can find the morning star. Something is happening with this thing of mine. I don't know what that is, but I don't get it. It is trying to misbehave. Oh. So, look for a candlestick without a. Okay. So, what we said about a morning star candlestick? We said it is formed in the course of a downtrend or in a downtrend market structure. So we need to look out for a downtrend movement in the market structure, and we see if we can be able to sight at a morning star in any downtrend market situation. I'm seeing a hammer there. On a downtrend market scenario, let me go to this, increase the size. Okay. Try to look through and get an morning star. This is an uptrend. Okay. Downtrend here. I think there is one here. Do you see here? Do you see that morning star and then the spinning top and then the bullish candlestick? We're having a red, an indecision candle, and it has been formed in the course of this movement. This was a downward movement from up there. Then we saw that, and then we had, see this movement, and then that. So do we see that? That is an example of a morning star that we have seen there. It's a 3 candlestick pattern where we have a bearish candlestick. We have an indecision candlestick in the names of a spinning top, and then a bullish candlestick. And then we said when you want to make entry, you can decide to make entry on the next candlestick open, and then try to establish this area, which is your support. You can decide, you can measure that distance to this point. The percentage you get is what you establish as margin call drop for the first call. However, we also said to get the best of any opportunity of buying as the price goes against you, your eyes should be set on that bullish candlestick. Halfway, measure that percentage. Let me see. Let me just do this like this. Let me mark. This would probably be the support zone in that case. Then this will be our entry price. This will be our target, profit target, which is the most recent swing high or the nearest resistance, and we measure from here to, so first of all, from there to here is about 0.86%. This is a 15 minutes time frame, remember? Okay, so half of that, which would be around 0.4, would be the length to set for your margin call draw for the first call, which would be around here, I think, around here. This will be roughly around half of the what? Around here, 4.44. Okay, down there. Okay, so half of that will be around here. Half of the candlestick would be around there. Yeah, right? Okay. What I'm showing you here is practical. It's what applies, and I want you not to just see or study it here, but go and do it. Go and try it out. You can try it out. If you want sometimes to confirm something, you may not need to put so much. Just pick a small portion of your capital to try it something out from what we've learned, and you see the outcome. So that would be the margin call drop. So this percentage would be the margin call drop for the first call. This percentage from here to here. Okay, this difference. Then this difference will be for your margin call drop too. I mean, margin call drop, it will be the margin call drop for the second call. But with this movement, once this position is once this call is made, or once the robot buys the first level, which is half, you will have to just wait for that delivery to the nearest resistance. So this would be our TP probably from point of entry, shall have our TP to the nearest resistance, and that will be about 1.22%, roughly 1.2%. So that's just an example of when we see a spinning, a morning star candlestick pattern formed. Okay. Let's see one more example. If you can see another, let's see any movement, any downward movement, any downtrend movement. And we see. I want a downtrend structure. So when you cite at those are just opportunities that you look out for. Remember, when you're using the candlestick patterns to trade, you may not only focus on one. There are a number of those candlestick patterns that will present opportunities, but this is just one of them. When you come across it, that's how you're supposed to execute entry. But beside that, you'll also be having one is here, another one is here. This is it was a slight movement, but I think we can also use it. Have this scenario. We have this also. You see this setup? That is also just one of it. That is the setup as well, because it has been registered in the course of that movement, that downward move. This was a long journey. From here, it has been forming all the way. So here becomes a standing point. Remember, this would be our support, the low of that indecision candlestick, sort of, which will, of course, will be retested at a later time. But for quick make entry, I think you'll apply the same principle. Enter on the next candle, stick open, take profit to the nearest resistance. Okay. Here, take profit to this point around here. This will be the nearest resistance in this case. Though it is small, but that will be the most surface and nearest resistance. unless you're willing to go for the other one, okay? For this other one here. But this, in this small movement, will be the most reliable for instant movement. And then later on, the market will deliver. So that is just one of them. But when you also come across a bullish engulfing, that is also an opportunity. If you come across a hammer, that is also an opportunity. So you don't only look out for one pattern, one bullish reversal pattern. There are several of them. It's just a matter of you knowing them. And when you get a chance and come across one which is just forming, it's even better. You see, you come here and see. See here. See here at our current price, what is forming around there. It's not good yet. It's not yet. Okay. So let's see on deer. Not beautiful. Market is still on a downward movement. Still a long way to go. Look at Sky AI. So I hope that is clear. Let's look at the next, possibly. Let's look at the next. We have the next being the opposite, which is an evening star. So with the evening star candlestick pattern, it is the opposite of the morning star. For it has also three candlestick patterns, or three candlesticks, beginning with the bullish candlestick, then an indecision candlestick, and then a bearish candlestick. And it happens in the course of an uptrend, meaning at the end of an uptrend. And similarly, this would be an exit opportunity for those who would have gone long, or those who are trading on the sports market. Once you sighted that formation at the tip or at the end of an uptrend, or in the course of an uptrend, it should be signaling a potential for a trend reversal to the downside. So you must exit the market before the price comes back to your starting point and probably taking it to into floating loss. So it happens up there, but it is also an opportunity for those who love shorting the market. If you sight at it at the end of an uptrend, it's an opportunity for you to short the market, right? Now, for you to short the market, same principle applies. You wait for that formation to be complete, and then the next candle open, which of course sometimes is a bearish candlestick as well. The next open is where you make entry. Okay, it's where you make entry, and then you you take profit to the nearest support. In that case, you take profits to the nearest support, and then just for in case point of entry, you measure that distance, and then the percentage you get there, you set it for your margin call drop for the first call. Let me see. All right, let me cover with this as well. Then we just go and cite a number of them. We try to look out for them on the chart. Now, the three white soldiers is a powerful bullish momentum candlestick pattern. It is a trend reversal pattern. All right. It is a trend reversal pattern. The bullish reversal pattern. equal length of the body. They have a very long body, and with either all right. What happened to my all right, so I was saying that this candlestick pattern is formed. The most effective one is formed when it is formed at the end of a downtrend. But also you do note that this candlestick pattern can also be formed in a sideways market structure. In sideways market structure, it can also be formed in between a rising trend, okay, in the middle there. But the effective one will be when it is formed when the price is in the course of a downtrend. Now here, most at times, the best strategy of trading this is making entry to or at the third candlestick open. Now, for example, not the when the third candlestick closes, actually, meaning if you have a setup of this nature, you have a setup like this. Okay. So margin call drops within. Now, depending can be big or huge. Sometimes it's really very small, depending on the time frame you're using. But just do know that your support here, the range between the entry price or the entry point to the support should be what you should set for your margin call drops. Okay. And also, because of the volatility, because of the little bit of the price fluctuation, when you make entry at the at the next candlestick open after the formation of the 3 consecutive candlestick, do also, just like the way you said, do also make sure that you measure from that point to now. There's something here. If just that we would be adding another thing, but when you when these 3 white soldiers are being formed. Now, if you're with your understanding of the smart money concept, probably this would be the major target for your margin call drop. But in between, for purposes of future price retest, before getting to your support, most of the times you should first be looking at the fair value gap formed in the course of the 3 candlestick pattern movement, right? Because in the course of this 3 candlestick formation, if at all a fair value gap is created, is left in between the first candlestick, the third candlestick, the best you're going to do is you're going to measure from that point of entry your first target of where you'd want the robot to make to buy in case the price tries to retrace a little bit or pull back, would be actually the fair value gap. Okay, around here, right? That should be the major target. But just not to confuse you, that will come in when we talk about the smart money concept probably. But that is what you'll be looking at, because that will be an imbalance that would have been created because of the bullish momentum building up in the market. So because of the liquidity being left a little bit behind, it has to be collected at a later time by the smart man, and then the price will move. It will not rule out the price coming back to retest around here in the near future. But for that movement, because of the strength of the movement, most of the times a three white soldier formation is always a strong movement. But in the course of the strong movement, it will be leaving, of course, some imbalances behind. Okay, some liquidity, so which will have to be revisited and taken out in the process of the rise. So that is how you go about this. And I will not talk about the opposite, which is this one here. But for let's just go and look at them, because it is literally a similar explanation. Just go and try to look at the other two. We looked at 3 white soldiers and then the evening star. So that's what you're going to look out for in the chart. So we said an evening star, first of all, is a 3 candlestick formation. You have a bullish candlestick, and then an indecision candlestick, and then you have a bearish candlestick. Now let's look at this. Let's look at this movement, and you tell me what you see at the end. Is this, then there is that, and then there is that, and then what? So tell me what you see at that point. What do you see here? Something here, then this. So do we see some reason for the market price to change direction around that area? And if at all, yes, what happened around that area? What signal did we actually register around there with regards to traders' intention? What is that candlestick pattern formed? What candlestick pattern is formed there? Evening star. Thank you, Sarah. That is an evening star. Okay, it is an evening star. Now, I wanted to say this. If we were to decide on network is cutting now, I don't know why. It's cutting why? Why are you cutting? Okay, I'm going to share. Okay, so let me share the screen again. It's been cutting, I don't know why. Okay, so coming around or sighting at this formation, remember we were tracking through that movement. So here we would gladly mark our entry zone. So sometimes the best you can do is come across a pattern like that and you're suspecting an indecision candlestick like this already being formed. A bearish, first of all, you had the price on the rise. or you have an uptrend movement. And then after the uptrend movement, you come across a bullish candlestick that has been formed, and then the candlestick that is forming after that is behaving like an initiation candlestick, probably. Oh, okay. So just come back here. So you mark your entry point after that formation. You mark your exit, which will be the nearest resistance. In this case, will be around here. You mark your resistance area, resistance line around there. And yeah, so you have that. So in the course of that movement, this becomes your entry zone will be here. This would become your exit point, your target. And that would be the point where the price will come and revisit later. Okay. And then you have that movement down. See that? So when that forms, you make entry here, your exit is here. This becomes your, so you'll have that kind of movement. This, then a retest around there. Then the next move will be a break of structure to this level, to this support area, support zone. Yeah. See that? Have a break of structure around there. Okay. So it becomes a key part of that movement. So this is how you would take profit. So you would just, it is small, but you can check it like that. This is just roughly around 0.4. But if you want a big TP, I know this is 15 minutes, depending on the momentum there. So you have this, but that will be the margin call drop in that movement. Okay. Okay. So that's how you would go about that. If you have, let me see if I can see, and what soldiers. Our time frame. So guys, with those, with some of those info, I trust you can as well help out in the course of your practice. You can be identifying a number of, you can be identifying them. Okay? You'll be identifying them, and I think they will be helpful. They'll always be helpful. Yeah. So you can also take your time. You can also take your time at your free time. You try to Look at this one here. This black crow. This black crow. This black crow. Do we see something here? See this? 1, 2, 3. See them? See them? See this? And in the course of that movement, this is what we call the black crow. It's this other candlestick pattern that I'd said I was not gonna talk about. This 3 consecutive red candlestick pattern that are formed, and it's the serious bearish signal. But just like, of course, as I said, that when they're moving, there's always a tendency of creating imbalance. Where is it again? There's a tendency of creating an imbalance. There's always some gaps left, like here, you see. You can see here, there's a fair value gap left here. See this fair value gap, which was retested later. Ooh, oh, this is beautiful. This is beautiful. See that? Yeah. So meaning, if you had cited at that, 1, 2, 3, you make entry here. You make entry at this point. At this point. So you will have to look out for where your resistance would be by slightly going backward, and I think your resistance area zone would be here. Yeah, this would be your resistance zone. Capture this entire area. That will be your resistance. Area of resistance will be here. So in that movement, you will do something here. This will be your resistance zone, right? I mean, sorry, the support zone. So if you make entry here, when you sight at a black crow, you make entry on this kind of pitch open, you take profit to this support. But at the same time, this would be your point of entry. This would be this support, this resistance point would be where, if you were to set margin call drop, you have to set this around there, or simply around this resistance area. You capture the entire area there. You're basing on an area. This would be your resistance area. Okay, which possibly would even be here. Would be at you will stop at this bearish candle open. That will be around 9%. But just like we said, if you bring in the aspects of the smart money, where you're making you're having your eyes on the institutional reference points, this would be a very key area that you will not ignore. So if you are going to establish your margin call drop for the short position that you're going to take, or for the short trade that you're going to take, you would measure from here first. Consider this. Okay, you'll consider this as your margin call drop first before you go to the other upper part. So you would measure this percentage from here just to this area, to this fair value gap here created, this fair value gap, this area. So you can set it there, and it is automatic. It will come and retest. The liquidity will come and be collected around there by the smart money before the price can continue downwards. Okay, you see, before the price continue downwards, the liquidity had to be first collected. So if you had entered here, of course, the price will deliver. But if you had taken a big TP, like for example, those who go for long TPs, 10, 20, then the price was going to come back to this. So that is very important, very, very important for all of us to note. Okay, so that is just an example of a crow. Then I think we have, let me see. Yeah, this could also be. So we would treat this. This is another movement of a 3 white soldier. So we capture this resistance area. This will be the resistance area. Okay. Then we have, yeah, this seems like a 3 white soldier. So if we had made entry around here, it's not a clear one though, but okay. Let's see how much this TP would be. This will be 5. There is a fair value gap created here. In this movement, we have some fair value gap created. Here, around this area. Wow. But at the same time, that is also we have a support around there. So literally, what we would do is we measure from point of entry. If we were to use the support, we would make entry, and then this would be also our call drop. It will be around roughly around 5 to 6% drop, but it may not really hit. But at a later time, it will. But there is where is the match would anticipate for the price to drop. If it doesn't drop instantly, then definitely in the near future. But that is what you would establish for taking advantage, just in case. And then from there to the resistance is where you would take as profit. That's around 5%. Okay. Yeah, that is also good. So, ladies and gentlemen, you can go ahead and try to identify some of these candlestick patterns we've tried to share about and look at their behavior. Look at what happened. Look at the price movement when they are formed. Okay, just to familiarize yourself with this kind of pattern. Just try to be checking through and see what happened, because for sure you are most likely going to encounter them in your analysis or in your trading journey. You will come across them and you may not notice them or take advantage of them if you don't practice very well on how to identify them once they happen, how to make those estimation of measurements of TP, margin call drops like that, and then we just see how it fares. Because when it comes to the reality, when they happen before your eyes, you should be in position to do exactly how you are practicing, so that you can get something out of that. Okay. So I trust that is quite enough for us today, and probably that would be the end for today, unless otherwise. This is another black crow pattern formed. So like here we have an evening star. We have some evening star here. This is an evening star, followed by a serious black crow formation. Okay. But at the moment, the market is just a quick one. The market is trading in anticipation. Traders are trading in anticipation of the outcome of the trade deal between US and China. So you're bound to see the price being very volatile, but just be calm. Just be calm. If you cannot make entry at all, just relax. But if you should, just be calm. Or if you will, or if you're gonna make some entry, please just be calm. The market is very volatile. Maybe it will stabilize if a clear deal is realized between the US and China. Do we have any updates? As we were learning, do we have any new updates with regards to what has happened between the two countries? Anybody? Do you have any latest updates with regards to that? Because anything that is going to be positive definitely is going to be something that is going to be positive on our side as well. We're going to see the market trying actually coming up. So anything. Or jelly. Nobody's saying I check jelly. Yeah, jelly is nice. Okay. Yeah, those are the trade wars currently trying to hold back our normal momentum bull run. Those threats of tariffs, it's really affecting the market so much. It's making the market to play picnic. But we hope something comes out clearly so that we really normalize, we have a good bull run. But also, as I also say, is that let's also not rule out the fact that we still have a little moment. We still have some time for the bull run. But it may or it may not be the anticipated bull run. That hyped bull run. We're yet to see. We have November. I remember in 2021, some of the coins achieved their all-time high during the month of November. Yeah. I don't know whether it will happen also this time, but time is running out. Time is running out. So let's be vigilant. Let's just trade. Let's learn. Let's continue learning so that we can trade right. Otherwise, it has been a blessing having you guys on the call today. And let's meet again, inshallah, probably tomorrow, if God permits. Yeah, but otherwise, it's been good having all of you on the call. I don't know do we have anything from anybody that they feel may be really important for us to take note of or be updated with? Because if it's not there, we'll literally end the call for today, and we meet probably tomorrow, if God allows. Yeah, so have a good day, guys, and happy trading. See you there.